Today's guest on Around the Coin is Alex Behar. He is the Chief Information Officer at Zotapay. He is also a visiting lecturer, teacher on cyber defense and crisis management at the University of National and World Economy. He is incredibly knowledgeable when it comes to cryptocurrencies and cybersecurity. And we talked a bit about the intersection of crypto and global payments, particularly in parts of the world that are up and coming, how Visa MasterCard networks are up against the wall in different parts of the world, and what the shift in payments is going to look like over the coming years with crypto. Hope you enjoy this conversation. Here is Alex Behar. Alex, I love your intro when we were talking pre-show about head of the geeks at Zotapay. Maybe to kick it off, would you tell me a little bit about what the business does at Zotapay and sort of where your headspace is over the last few years?
Yes, thank you, Mike, for having me. So Zotapay is a payments marketplace, it's a global payment marketplace. We enable merchants to access nearly 6 billion people on the planet in over 60 countries worldwide in various currencies and jurisdictions. Zota mainly caters to enterprise and mid-size clients that are actually sophisticated and operate businesses in multiple countries, dozens from time to time, and we allow them to effectively bidirectionally access nearly 1,200 various payment endpoints and payment methods in various jurisdictions around the globe.
And so when you think about cybersecurity as somebody who does, what comes to mind? Like, what are the big parts of cybersecurity and what is cybersecurity?
So, I mean, to me, I'm a guy with sort of a payments hammer in my hand. So of course, I want to make sure that the world of payments is able to conduct more securely and there's less fraud and other things that have plagued the industry. And I'll give an example. Some of the initial issues that customers complained of since the very beginning of credit cards in the 50s and 60s has been fraud. This is actually a constant thing. So that hasn't changed ever since. And this all of that risk is effectively transferred on us as customers here in the Western world, where we use cards for a large number of our transactions, either via the internet or physically in person. So that has been the security of this card information has been something that it has been an issue since the very dawn of the industry. I feel so the way the credit card is designed, it's actually one of your oldest pieces of technology that you physically own. If you think about it, nothing else has a magnetic strip that you can go and swipe at a terminal. So that's sort of the legacy baggage that comes with the credit card industry. And one of the issues there is of course the cybersecurity and fraud rate. We've heard all of us about major breaches where millions and millions of card numbers are copied, and then they are useful then to be able to buy illicit wares or conduct fraudulent transactions with them online. So one of the alternatives actually, and as they are actually called alternative payment methods, is what really is proliferating all around the world. So the 2022 FIS Global Payments Report noted that in a lot of the emerging markets, the penetration rate of Visa and MasterCard is under 20%. And there are several reasons for it. A bunch that I can see firsthand by observing it in locally and with various merchants there, and just traveling and buying stuff at markets and talking to people, is the fact that participating in the Visa and MasterCard ecosystem is actually expensive, right? Any credit card related device is an expensive ordeal. The card itself, there's a certain amount of cost associated with it, but also the POS terminal itself is not cheap. It's a device that has to be certified, has to be secured. So this exact point where the card meets the POS terminal is expensive to run for merchants who, for example, an Indonesian seller of fish, for example, would prefer to use his $25 or her $25 Android device to conduct a transaction instead of having to buy hundreds of dollars worth of a POS terminal to use for only people that carry POS terminals. So in vast areas of the world and nearly 6 billion people, so there's 3 billion credit cards issued to about 1.5 billion unique individuals. So nearly 6 billion people out there still conduct transactions digitally and online. They just don't do it via traditional payment methods. So Zotapay effectively focuses on the alternative payment world, being able to reach bidirectionally everyone on the planet, especially those who do not have a credit card. So I hope that.
Yeah. So what do you think of the general trends that's happening in the world, say outside the US in particular? I almost think there's tell me where you would push back on this, but there's a leapfrogging that's happening where distribution of actual physical cards is not happening at the same rate that it did in the US, because during the card distribution era of the 80s and 90s and early 2000s, there wasn't the smartphone technology to handle payments through your phone. Now that that exists, there's just a far lower incentive for people in Africa, Southeast Asia, areas that haven't had those physical cards, or the merchants haven't had the terminals. That network hasn't been built. There's just not, people don't want that, right? They would just rather use their phone. So are you basically saying that Visa, MasterCard are not distributing physical cards, and instead they're like integrating with the Apple Pays or Samsung Pays of the world, and they'll still have a successful network business, Visa, MasterCard will, through just purely digital distribution of card numbers? Or do you think this plays out in some different way entirely?
It's the majority of people, so at least 80% of people in outside of the OECD nations do not have a Visa or MasterCard product. So whether it's a card, debit, or anything of the sort. So that actually creates a world where Visa and MasterCard, effectively the ability to address with credit card, through credit card schemes, the world are not very large, because the entry level there's a few unlocks that happen if you think about it with the invention of the mobile phone and it becoming so widely accessible because of the cost curve of it falling. Right, it allowed a small device, a small computing device that has a display that is constantly internet connected, that has a camera. So all of these things, when put together, effectively make the card ecosystem obsolete in and of itself, the physical plastic part of it, because you always have a constantly connected device. The other entity has the ability to potentially even issue you a QR code or any NFC kind of a payment mechanism, such as Apple Pay. And others. So the way the payments are conducted outside of sort of Europe, the US, Japan, and then a few other places in the world are more oriented toward this payment forms of peer-to-peer and alternative payment methods. A way to think about this in sort of our US context is the way Venmo or would compete with Visa, for example. Right? It's an alternative payment method, even though it's connected. And let's assume for a second that it's an entirely alternative payment method, then you can be a Venmo customer and not be a Visa customer, for the sake of the argument. This exists all around the world. I mean, there are super apps out there, and we start hearing about this more and more in English Western media. But that has been the case for at least 5 to 7 years in a lot of countries out there where a single entity is doing payment processing and other lending services and other things. So that really is a non-addressed market for, I guess, the card duopoly, if I may call it this way.
Yeah. So do you kind of synthesize that reality as the idea of a monthly credit card or monthly credit line kind of becoming obsolete as a thing of the past? Like, why do people even use credit cards today? It feels like a little bit of this circular reward system where I use a credit card not because I need the credit. I have plenty of cash to pay off my bill, but I'm not living month to month, but I would rather get the points. And so people use credit cards instead of debit cards or Venmo because of the points. Well, the points come from the merchants. The merchants pay a tax to the credit card companies. And so it's like basically a slight discount.
Which means, by the way, we pay a tax to the credit card companies.
Right. Well, no, it doesn't mean more specifically that the people who, it means, yes, you pay a tax, but the people who use a debit card or a peer-to-peer transaction at a merchant that also accepts credit cards, those are the people that are paying the biggest tax, because they pay the tax for the people who use the credit cards who get the points. So it seems like usually you don't go into a store and see two different prices. It's like you don't see like, this is the price for credit card, this is the price for Venmo or cash. It's the same thing. So there's like a tax that's really outsized on people who are paying with debit or direct cash.
Yeah, I guess the card companies, especially in the US and in Europe to an extent, were able to build very successful modes around their business model by forbidding merchants, amongst other things, of advertising the price without the transaction versus the price with transaction cost of various items. But let me just try to break this down into a few pieces. One is the plastic part, effectively the payment instrument of the card itself, whether it's a debit or a credit, is irrelevant. And the other is the financial service that is attached to it, which is the credit aspect of it, the credit line aspect of it. And there's no reason why an alternative payment method would not have a credit line aspect to it. Why wouldn't a local lender lend a small merchant, say, said Fisher, to purchase a new fishing boat for her family, or maybe create a factory for their products and lend against their cash flow, future cash flow, in order to be able to expand their business, right? So there's plenty of lending and micro lending ecosystems that have spurred out there to the extent where Western banks, as we know them and as we use them, look nothing like some local alternatives, especially in Africa and central parts of Africa.
But isn't that idea a little bit backwards, in the sense that when I use a credit card as a consumer, I'm getting paid for taking out credit? You know, at the end of the month, I pay off the bill, and assuming I pay off the bill and I had that 30 days of credit, they're paying me for having that credit. Whereas a typical credit line, I pay the bank, or I pay whoever is lending me money. So the incentives are kind of backwards for people who are using credit cards today, as opposed to people who are taking microloans out for business purchases elsewhere.
So it's a very interesting point. It is a very interesting point. I actually want to say one thing that is fairly certain, sort of an axiom, and that is the fact that neither the credit card providers nor any of the folks in the entire value chain are actually subsidizing your use to an extent, right? There's always a value transfer somewhere. And it's at the end of the day, there's industry standard pricing of especially in the card ecosystem, and there's very little wiggle room to compete also because of the pricing being just so, I guess, ubiquitous. There's so many players that compete in the card space, and that actually puts the pricing effectively pretty much the same across everyone. So from that perspective, I think the price discovery works between clients and the card providers.
Just let me make sure I understand you correctly. So the clients and the card provider. So you're saying that because there's so much competition and commoditization, that the points that consumers are getting for using credit cards is about the same, like 1.5% to 2.5%, whereas maybe that's also true for the lenders. But I still wonder, like, if there's this
on some purchases the points are less than others. Like if you look, for example, the way airline cards work, and I'm not an expert on the reward programs of US card systems. I spent the majority of my life in Israel and Europe, but effectively it's an acquisition cost. It could be thought of as an acquisition cost by whoever provides the card. I mean, if they provide you better rewards for flying an airline or purchasing from a certain store, at the end, it's a positive return exercise for them.
So it almost seems like there's a A/B test going on. On one part of the world, you have this kind of circular coupon reward system where the network itself, the Visa, MasterCard, require that the merchants don't have multiple pricing options. So the people who are using the credit cards are benefiting, they're getting the points back, and that's kind of exciting. People think about points, they like to use credit cards for the points. And on the other side, you have peer-to-peer transactions where merchants are not accepting credit cards, and so the prices are going to be 2 to 3% lower because they don't have that transaction fee through the payment process. Do you see one of these methods as being more successful in the long run? Like, do we kind of converge? I mean, I would think that people would just want cheaper items instead of having this this game of like a monthly credit card, and then you get points, but they're not really money. They're like points that you can only spend on hotels. But is that what gets played out in the numbers?
So I guess one of the biggest tailwinds to the card industry around the world also is the support for mobile payments such as Apple Pay and Google and so on. But merchants themselves also, especially ones that produce content or applications or games or any part of the digital economy, and have assets on these app stores, they would like to address the non-card, which is up to 6 billion people in the world, effectively the non-card ecosystem. And it's very difficult to do this under the current model for Apple Pay and Google and so on, because they only support either in some selected markets direct debit, but mostly connecting with cards that are either Visa or Master, and also paying with them this way.
Okay.
So I mean, there's a lawsuit going on, and there's a few challenges. And from my understanding, it's still ongoing and highly disputed matter. But the general feeling and the way we're looking at this is that a lot of Western companies and in the US and Europe specifically, not knowing how large the non-card payment world is, are maybe not monetizing their already strong brands out there in the emerging markets.
And do you think, it seems like Apple Pay and Samsung Pay are in a really unique position because they're kind of controlling the future or the current, but really ever more so the future of the bottleneck of, or the hardware component, the hardware software interface for payments. So people use their credit card. Their credit card now is increasingly on their phone, and the concept of a credit card will probably feel like a record or a CD or a cassette, where it's like, we have the little logo, an MP3 logo on my computer might have a CD, but like, if you ask kids now, they don't know what a cassette is. Like, so this is going to become like a software or digitally represented token, where the physical card, I imagine, will have to become a relic of the past soon enough. And so you have this card on your phone, you swipe through it, like it looks like a bunch of cards, but really we're retrofitting the horse to the car. It's like, in reality,
and adding expiration dates. I mean, there's several innovations that have happened. PIN codes and 3D secure, and
exactly. You don't need that stuff anymore. I mean, it'll probably be there for a while because it'll just be. You want to be able to use your card everywhere you go, and so some merchants will be slow. But I imagine why doesn't Apple have their own payment? I guess they kind of do. Like, is Apple and Samsung's end goal, I guess Google, to try to own the payment flow? Like, are they viewing themselves as effectively wanting to disintermediate the credit card companies and own the payment network? Do you think?
I can only assume, but it definitely is a lucrative ecosystem for them, especially with the data and being able to launch other products on the back of it, even subsidize the cost of payments effectively, which they're currently not doing. But theoretically, they could, in order to try to monetize various other services around it. But the demand for non-card payments is clear already. I mean, even some more modern iPhones and of course Android phones support NFC from Visa and Mastercards already. And you're right. I also don't think that the payment instrument of a plastic card is something that will continue to be around for much longer, just because of how aware everyone of using a cell phone is, and how much they understand the value. So even some car makers are already removing the car keys and putting them in a digital key. So I think that's where it's going. Everyone's the phone is sort of the center of their universe pretty much, and that allows also running a business from your phone and accepting payments and other things.
Interesting. Yeah, it seems like it's converging on a simpler solution in one sense, where it's just digital, it's just one network. Unless
and that's not to speak, by the way, of the challenge that digital assets and general crypto currencies have to traditional banking and traditional funds transfer. At Zota, actually, we're a fairly large user of stablecoins, as effectively a challenge to the SWIFT network for being too expensive. And the ability to actually conduct such treasury operations is something that many businesses are recognizing today. And if you speak to some of the guys at Tether or Circle or other of the big stable providers, you quickly are kind of seeing that there are large players out there that effectively are using the digital asset space as just means of moving vast amounts of value as a challenger to already existing payment infrastructure of the past.
Interesting. And so when you say the treasury, are these companies, or do you think a winning strategy is to, I think of stablecoins or the stablecoin operators as they have a bank account somewhere, a traditional bank account, and they have money in that bank account, and the amount of money that they have in the bank account should line up with the amount of money in circulation 1-to-1. And USDC is one currency, I think, that's outright and audited to make that claim, whereas Tether, I believe, does not guarantee a 1-to-1 balance. So if you look at the graph, there seems to be a volume shift happening away from Tether towards USDC. And I think there was a lot of pressure on Tether during the Terra Luna collapse, that stablecoin. But no one really knows how much money they have in the account, as far as I know. Now, I don't know if you have another perspective on this, but how do you view these companies, or how do you think the emergence of stablecoins or crypto in general starts to really meaningfully start to disrupt payment networks?
So I guess the crypto could be thought of as something that is equally as disruptive over the long run as I guess a mobile device, a mobile phone, a mobile computer. Really, because it allows the ability to transfer funds in a fairly cheap manner, and to create new assets and distribute them, and a bunch of other cool things that we haven't even thought of yet. Quite honestly, in 5 years, the crypto space will look completely different than it does today. It did so 5 years ago already. Mm-hmm. So that's sort of one thing that's certainly it's challenging all kinds of industries, not just the payment instrument industry itself, but all across the value chain of payments. And traditional finance, as it turns out. As far as the stablecoin providers, I mean, the Tether and Circle, and I guess Binance are the three largest. I cannot speak about the controversial matters around Tether. There's a bunch of stuff on the internet, and we'll let the viewers and listeners actually do their sort of build their opinion on that. But there's a lot of controversy around them, and operating stablecoins is certainly not an easy financial challenge. The stablecoins operators, actually, if you go and read through their documentations and speak to their salespeople, you'll quickly understand that they have access to vast payment rails and the ability to conduct payments in various currencies, or SWIFT and SEPA and other payment networks all around the world. So effectively, if you're a large consumer of their services, you could send them sometimes from the data that Circle actually posts out, hundreds of millions of dollars per week, and they would actually disperse that in fiat via SWIFT. So they effectively are able to do this on and off boarding or on and off ramping at a ridiculous scale, which is their job in the industry.
All right, so Alex, one of the things I kind of am curious about here is how do we synthesize this? Like, how do we synthesize this into a worldview or a general pattern or trend that's happening? And so that's where I'm most interested in the intersection of crypto, because crypto feels like it's the thing that's changing everything else. There's certainly the hardware component with the smartphones that are changing it, but underlying the smartphones, the Samsung Pay and Apple Pay, are still the same rails. So we're taking a new shape, but it's mildly interesting. Like, we have a digital credit card instead of physical credit card, but it's still a credit card, still the same incentive structures. I'm always fascinated when we change an underlying system, because that changes the incentive and that changes the world. So do you see, from your vantage point, a massive shift happening, or do you anticipate it to happen? Or I imagine it's going to happen in different parts of the world first, but how does crypto really meaningfully change the world of payments that you're seeing?
So in terms of as an institution and looking at this from a very narrow point of view, as effectively conducting treasury operations. There's already a big adoption of various stablecoin providers out there, and they're used on chain very successfully. And operators like Circle, for example, process hundreds of millions of redemptions per week, sometimes according to their publicly shared information. So there's already an ecosystem with a lot of demand. They're able to, of course, be a gateway, specifically Circle and Tether, for example, between the digital asset space, the blockchain itself, and fiat world by providing institutions and large clients such as family offices and other large financial entities access to vast amounts of stable coins to fiat on and off ramping effectively. So the first way that I'm already seeing the blockchain and crypto digital asset space affect traditional finance is by the ability of various financial institutions to operate completely in stablecoins on the various chains and redeem those for fiat as effectively a challenger to SWIFT and other banking institutions that are another essentially link in the value chain and also being paid fees, sometimes as a percentage of volume. So we are seeing a lot of providers already mandate the use of it. And one way to actually judge how the enterprise sort of demand for these assets is to look at the adoption of things like Fireblocks and other effectively treasury and asset storage management mechanisms that allow larger institutions to do this, and the ecosystem is growing rapidly from my point of view. I'm not sure how retail payments and how that will the whole crypto space is yet to meaningfully impact the way we actually pay at a POS terminal and that entire life cycle. But on the larger institutional front, there already is quite a bit of demand and activity on that front.
And break me down a little bit. So you mentioned Fireblocks and then institutional activity. What does that mean? Does that mean like a company is paying another company for services and they're settling on USDC? And then what are Fireblocks?
So Fireblocks is a company that manages provides multi-signature access to digital assets on chain and off chain. They have, I'm not going to make a full pitch for them, but they have a very interesting product that allows companies like ourselves to manage digital assets regardless of the cryptocurrency in a secure fashion and conduct transactions with other entities. So that effectively, if you think of Fireblocks as a clever online banking for blockchain based assets. So that allows various large institutions to settle funds between themselves in seconds instead of days, and paying large fees. This could be thought of as a way for let's say a payment institution in Malaysia to settle with a European client of theirs for selling a certain good or service locally there.
Interesting. And so that's happening rapidly at this point. These large organizations,
which
have a major incentive, right?
Yeah. Yes. It's just that the cost of conducting these transactions, just the cost curve has gone so low that today wiring of a few $100,000 USD over SWIFT versus transacting it via a stablecoin like USDC or Tether, it's actually quite a lot cheaper to do it on the chain.
And do you see are we headed towards a world where there is just a decreasing influence from traditional banking and payment infrastructure, and this new crypto technology starts to become like more mainstream? Or do you think there'll be a state, either the US or other Western states, start to really fight that, where they view it as like, hey, initially maybe it's USDC, but maybe there's another stable coin, and people move into Bitcoin, and the US dollar starts to decrease in relative power for international trade? Are we headed towards that as an inevitability? Do you think the US in particular, since it's the global reserve currency, do you think the US like institution as a government starts to fight this in some way? I mean, they've kind of dragged their feet up until this point in terms of like regulation, but they have not by any means like declared war on cryptocurrency. And I wonder, is that possible? Is that inevitable? Do you have a view on that?
So it's an interesting question. So from a regulatory perspective, there's a lot of things that are being said and a lot of activity on behalf of regulators in the U.S. and also in every other large economy, just because of these flows between crypto and fiat and the crypto ecosystem growing to surpass $1 trillion and then $2 trillion at some point. So it's definitely regulators definitely starting to pay more attention. I cannot speak to how that will affect the regulatory frameworks that the various regulators are looking at. My focus generally is just on sort of the regulated financial institutional side, and for now, we effectively entities like us, according to regulations such as the FCA and other European regulators, they actually force us to treat this as a global treasury. So the USDC effectively is just the US dollar, and it's being treated as such. So from that perspective, there's not a significant difference there. It's an asset. I hope that answers your question.
Yeah. Well, I'm kind of more or less getting at, like, are we headed, do you think there's a 1% chance, 99% chance, or somewhere in between of governments overtly like saying, hey, we're blocking citizens' use of cryptocurrency because they're going to say it's for safety, right? They're like, of course, it's always about safety, but really it's about control. And so there's always a seesaw relationship between safety, like privacy and safety. Like, you could have incredible safety as provided by the government, but then you have no privacy. And so I wonder to what degree people, and I ask this question a lot just to get people's temperature on it, like, is there an inevitable conflict of interest? There seems to be an obvious conflict of interest. As we move away from the US dollar and into crypto, the US dollar is less valuable. And the US government cares about the US dollar's influence in world trade. So I don't know. I try to like mash this together and like, is there something I'm missing? Do you see something happening internationally?
Is there a larger macro sort of play? I see where you're going with this. Well, it's a fairly open-ended question, but I'll say the following. In terms of just the larger flows of USD, Euro and other currencies, the crypto ecosystem is fairly small today and will remain to be so, and maybe in the next decade. So I don't think it poses a threat to any national, at least large economy national currency yet. But I think that any single country creating laws and trying to especially enforce laws against digital assets will actually cause against any actually payment flows such as capital flight controls and others, which is a very popular dictatorship, method. So once these capital flows are enforced, then effectively the friction of using a crypto versus another payment method that they use today all of a sudden doesn't look very frictiony. So it looks it's a lot easier to do this with crypto than what I used to do before, because now I cannot transact, I cannot buy certain items, I cannot transact with another country, and so on and so forth. So from that perspective, certainly, politics in all kinds of places around the world could cause small pockets of very rapid adoption of digital assets, maybe ones that are to the local market and local digital currency, maybe that local providers run. But I definitely see that happening, especially in the emerging markets.
Yeah. It just seems like the U.S. has printed an exorbitant amount of money, and that offsets. It really creates it hurts people internationally much more so. If the U.S. bank, the Federal Reserve, prints money and gives it to U.S. citizens, well, that hurts everyone else outside of the U.S. who's not receiving those payments. It would be one thing if they like airdropped it to everyone equally, but there'd be no point to doing that. They'd just be like,
Exactly.
Here's some money. So then it at a certain point, it reaches this, you print money to pay off the debts that you already have, and then you sort of get into this, like, the flywheel kind of loses grip, and then like hyperinflation starts to kick in a meaningful way. And the U.S. is, this is the number one concern of the country, and it seems to be the number one most popular topic to not let this happen. But if and when it does, it seems to be a pattern throughout history. There's like you say, a capital flight. People move out of the currency. They may buy property like real estate. They may move into the equities market, but increasingly so, crypto is a fast and simple way to move out of the US dollar. And in particular, if you're holding your US dollar in stablecoin on chain, it's like, 10 seconds later, you could have Bitcoin instead of US dollar. So given that the back door is so open,
Yeah. Awkwardly enough, it's a very tangible asset for a number of non-USD and not, I would say, non-Western countries, such in South America, where effectively buying a US share from a brokerage might not be as easy as it seems, but buying crypto might happen even locally from peer-to-peer or even from, of course, regulated exchanges that you're able to. So digital assets all of a sudden become something that more people understand, as awkwardly as it might sound, than they do traditional financial instruments that pension funds have traditionally invested in.
Are there other areas? So we talked a little bit about this tension between governments and policy as the US dollar it competes with, in a more meaningful way, alternatives in crypto. We talked about the evolution of the credit cards and the potential tension that they're going to have with competing like digital currencies. Are there other areas that you think are especially poignant or especially interesting as we go into like 2022, 3, 4, 5, 6, the next 5 to 10 years that will be very topical or maybe underappreciated in the world of payments that you're seeing?
Yeah, I definitely see a few trends that are very, very interesting and effectively will benefit clients the most, and that is the way the entire ecosystem is effectively fighting to reduce the cost of transferring and making payments. When a large amount of market share, especially in retail payments, is controlled by a duopoly such as the Visa Mastercard duopoly and other schemes in all around the world. When such things occur, there is unnatural price discovery. Effectively, they're able to corner the market. And I think by just the virtue of how fragmented the market is all around the world, and similar sort of calls and realizations on behalf of our Western firms and digital technology companies here, I think this is something very, very interesting. Elon Musk is saying all kinds of things about Twitter going into payments, potentially global payments. So we're yet to see. There's also the story of Facebook's a project in the space. So we're yet to see who manages and how to sort of implement these kinds of functionalities here, but in other places all around the world, I think that's already a given, just because they skipped the whole process of dealing with credit cards. That entire technology cycle of digital payments came with the mobile phone, and at this point, the card system didn't make much sense. So from my perspective, I do say a sort of an arc, a narrative arc of just removing all of these layers and frictions in the payment system.
So it's almost to say that the thing to look out for would be existing social networks, injecting payments into them. So like Facebook did this with the Facebook Messenger. There's like a pay button. Apple Pay does this. You could pay other people with the cash. Then there's companies like Square who kind of pseudo did this because they had an existing network of merchants, but then they launched the Cash App, which is like, they had to build that from the ground up, but they really kind of doubled down on the user experience. There seems to be maybe an opportunity like in Twitter where you have a large existing social network that you can then include payments into that, as opposed to try to build it from the ground up, which makes sense to me. I mean, Twitter, there's probably not a lot of those, right? There's like Twitter, maybe Reddit, whatever social network is out there. Then another approach would be like government forced, you could have, but that seems like it's just not going to happen. I mean, CBDCs are a topic, but
the government is of course best spend its effort by pulling instead of pushing with regulation. I mean, there's a bunch of very, very clever folks working on behalf of the regulators. I mean, I get to deal with them a lot over the last few years, and I can actually see the level of talent that works there and the folks that are operating. And I think it's short-sighted of us to not consider the fact that some of the brightest folks work in these institutions and are also looking at the same data. We are in it, for example, on the fact of the Federal Reserve, right? Some of the brightest economists of our generation are sitting in offices right now and trying to crunch the numbers and innovating in all kinds of ways for us to be able to better understand this level of data to this level.
See, like I'm so torn because I love that you're saying that, but when I look around at in particular, U.S. politicians, but even many of the Western politicians, there seems to be such a consistently shallow level of sophistication amongst the folks talking about particularly economic policies that I don't know. It doesn't give me a lot of hope or a lot of faith that there's much intellectual capacity happening underneath the hood. Alex, so I love this point. I find it really fascinating, which is that you're saying you're interacting with a lot of people in government, I imagine the US government, that are sophisticated, nuanced, the best economists of our time, which is awesome to hear. That's what I would have hoped you would have said. I hope it's genuinely true, and I hope they're having the ability to influence policy in a meaningful way, the smartest people. I somehow just, I don't see it ripple effect. I worry about the interaction politically because it seems like political leaders are just not nearly as either both honest and nuanced in their sophistication of economic policies. Like it just kind of feels like broad strokes, print $1 trillion here, print $1 trillion. There's no philosophical stance, or maybe none that's articulated clearly about what the policy is. Like I think back to John Maynard Keynes and Hayek and like the role at which government should be intervening in the private markets. And there was a lot of really great debate happening, but I don't see it. And I hope to God it's happening because it's just so important. You can't just assume the government could come in, print $1 trillion and solve the problem. And deep down, we all know that. But like the answer is somewhere really nuanced and sophisticated. So, yeah.
Well, I guess the answer was to print between 0 and 3, and $1 trillion, I guess, somewhere in the middle. But I guess where all of us are sort of discounting what it means to be a politician and effectively to be dealing in statecraft in the day and age of social media and the kind of talent that's attracting. And there is a great bunch of very, very good science on effectively what it means and what the kind of people it takes to effectively be able to polarize in their own ways in modern politics. So I guess that's where your observation would be stemming from, and I can't really talk about this part very much as I have no expertise in political matters, especially in the already complex U.S. political system as it is. But I will say the following: I think that the institutions such as the Federal Reserve and local and of course some of the global banks, some of the folks that work there are very, very sophisticated operators. I would say. I mean, the level of knowledge, understanding, and the sort of commitment it takes to analyze this data in let's say Federal Reserve of St. Louis. It just requires people who are, would have an amazing career on Wall Street if that's what they wanted, right? So some of the people working there are amazing at their craft. They're able to analyze and effectively innovate in how data is analyzed and understood. And I think that's really what has showed that the U.S. model to be more successful in many ways than the European model, where each and every country sort of runs its own yardstick measurement apparatus, and they're not as effective as and not able to implement such policies as U.S. ones. But one thing to be cognizant of is the fact that such institutions attract amazing people with different kinds of skill sets and commitments, and some of them actually really don't need to progress from a career perspective if they come, for example, from a wealthier family. So they don't want to go into Wall Street and everything that comes with that work culture over there, and instead focus on effectively statecraft and policy. I think that's a very interesting, very cool folks, and there's some very amazing innovation that happens.
Yeah. Anything else you wanted to share? I know you spent a lot of time thinking about cybersecurity and crypto and payment networks, particularly abroad. Otherwise, I can ask you your favorite books and podcasts and things that have influenced you the most.
So on the cybersecurity side, I'd like to sort of merge this with crypto and digital assets. more broadly, I think that that's a really defining issue, and we can see this in the statistics. And unless, as an industry, we figure out how to collaborate together to chase the threat actors and be able to mount more meaningful countermeasures to them being able to actually move this money into real, to move this money into the real financial system, which is happening by threat actors such as South Korea and others all around the globe who are able to conduct this at scale. So I think that as an industry, in both the payments and of course digital assets, from a business to business or a B2B perspective, we just need to get our heads together collectively and figure out what this new platform and ability to transact allows us in order to better address the threats that we all face, so that there is a large disincentive of someone to go and perpetrate a large hack of an exchange or any digital asset ecosystem or project, just because they don't know that local or global law enforcement will come after them and seize those assets. So I think that's a major challenge that the entire industry needs to be more serious about. As far as podcasts, go ahead.
Yeah, I was going to ask what books or content, pieces of content have influenced your thinking the most in recent years?
So I would say Philip Tetlock's Superforecasters. That was a very, very interesting book. And it's just it's interesting how folks who professionally work as forecasters and to predict certain events, what their success rate is, and how this entire industry sort of works in the scope of financial consulting, financial managers, and so on and so forth. Another podcast I enjoy a lot is Gardner's Freakonomics and the related series. I don't know if you've been listening to them. They have amazing content, very thoughtful, and they cover a variety of matters that I enjoy. Of course, Financial Times and Barry Riethel is actually a Bloomberg reporter. He brings interesting business leaders to discuss various matters that are very interesting, and folks from various backgrounds also, literally from security to real estate to finance and other things. And yeah, that would be a few good ones to I guess go on.
Awesome. Well, thanks so much, Alex. Congrats on all your progress so far. And, it sounds like a really exciting area to be in. So hope to have you back on someday. And
thank you
for your time,
Looking
man.
forward. Yep, you too.
Take care.